You can go to our website. We have on there, it's bnd.nd.gov, and you go through, there's the whole 106-year story that we have a book written about. And it's a very kind of a dramatic story. It wasn't always perfect. There are times when there was a little competition. There was times when it didn't work so well. But if you read through that history, and it's very sure today, is we communicate a lot with our banks and our financial institutions. And it took a long time to build that trust, but that trust is there now. Now, if you're at the beginning and your community banks, credit unions, I'm sure they're looking at the idea of a state-owned bank as what probably the most socialist idea, and it's going to compete with us and it's going to destroy who we are. I think you really got to sit down and talk to them about, look at the BND model and look, yes, it's not perfect, but look at what it has done for community banks up there. It's not just the fact that you get to sell off loans. It helps you manage your balance sheet better. It helps you be there in terms of times of disasters, so you're not carrying all that weight. If you heard the story from our community banks, credit unions, you'd hear, because I hear it, they've helped us grow, they've helped us enter new markets, they've helped us with M&A, they've helped us with shareholder issues because we do stock loans, they've helped us be there for our customers during PPP and floods and disasters and fires, but also they've been just a good partner. We know who they are. One is in that core vertical participation. So a lot of the times our banks, credit unions, they wouldn't do a startup business or a startup operation out there on their own. It's just too much risk. So share them with us. There are some deals we do that we de-risk those with them. We'll share. We might buy 90% of the deal if we like it, and help facilitate that where they otherwise, that business probably wouldn't have been able to get. And then we might pull in commerce on a grant. We might pull in whatever agency that exists to support. Part of our dividends goes to support our SBIC in-state, and that lead bank may pull in SBA, USDA guarantee programs. So we partner with SBA, USDA a lot in state. So it's really that symbiotic partnership. The other thing we have is kind of in our mission vertical where we get creative, the one I could go on and on about. We have a couple ag programs in there. Now these things are 40 years old. It's the beginner loan farmer program and the established loan farmer program. They're the only two real ag programs we do direct. And we do them direct because no bank is really funding any beginner farmer. Quite frankly, because the beginner farmer, the amount of equipment you got to buy and the land is so expensive, and you don't have a chance to succeed. You got to inherit it. And in that inheritance, you got to have mom and dad or grandma and grandpa that are going to give you some time to transition. So we have those two programs, but what we're doing right now is I've tasked my team. I said, I want those two programs looked at, and I want you to completely rethink them, and I want you to completely work from the current needs of agriculture in North Dakota now backwards to what would be a couple good programs to go through our banks or maybe direct that would help agriculture. And one of the top ones is succession. Another one is how do we help agriculture embrace more regenerative for the health of agriculture, because the margins are becoming too volatile, too slim, and it's a real factor that our farmers can't exist long-term without government aid and support and stability, and that's not healthy. And there's a way to figure out a way to kind of fix that. So we want to do our part, so we're doing that in a couple different ways. I don't know if it's this way in New Mexico, but in North Dakota, the problem with a bank or credit union lending into a tribal area is sovereignty, and being able to get a secured, perfected mortgage on land or a title on a car, and you got to go through tribal council. So we help our banks if they want to go into tribal land and do a lending relationship, and they do quite a bit. We'll help share in that deal, and then we are able to work with tribal councils quite a bit to ease some of that, whether there's some collection activity that's needed or whether there's just some structural items. It's not perfect, but I do know we make a difference in that core participation lending vertical. Our banks are more willing to lend into the tribal areas with some of those structural issues or those sovereignty issues that we have in North Dakota, with us kind of backing them and backstopping them. So we do that. Yeah, I have specific examples. The Oaks, North Dakota farming community in the Red River Valley. their regional rural health care facility. We partnered with Lead Bank there and got that built. And I know for a fact that wouldn't have got done. And again, we pulled in some grants and some other things from we quarterbacked the deal to get it done. So definitely examples of that in that participation lending. And then of course, like you see through the legislative directed program, we help manage that. So that's the role we play. We may have a new role coming. We're about to have a special session January 21st, I think, right, Shanda? To spend that federal money on, and distribute it through. So I would imagine we'll be working with the legislature on what additional roles, if any, they want the bank to play in terms of facilitating those dollars or matching those dollars or whatever creative idea we like to work on. So, yeah. Great question, thank you. Very low, and I'll say, and it would only make sense, right? So keep in mind, we're on a $10 billion balance sheet of assets. $7 billion of that, $6 billion of that is, or we could $5 billion, half of it, is participated with all those banks and credit unions. So because that's the case, our credit quality metrics are going to really mirror the credit quality metrics of your state community banks and financial institutions on average. So however your state running is how we're going to run. Our state, and we run super, I think our historical average charge-off rate over the last decade is 0.06 to 0.08%. So that's, that's not 6 or 8%, that's 0.06 or 0.08%. It's like 8 basis points. Very, very low. Our problem loans are very, very low. Now our state benefits from nice oil and gas and agriculture, and we've got nice transportation corridors in Fargo going up to Canada, and so we have some nice healthy industries in the state which help us even through tough national times. But that double underwrite, the fact that our asset mix is really our community banks and credit unions asset mix, I would say this, as you're looking at a New Mexico public bank, look at what the long-term loss rate is on your community banks and your credit unions in the state. That's what the loss rate will be on your potential public bank. It will mirror that. There are times they share a little risk with us, but we're still underwriting it. We're still making our own risk decisions, and that's the most important thing in banking is you've got good decision trees and good bankers making good risk decisions in your bank so you don't put on too much risk. You do that right, you can make a lot of money and survive a long time. And so your public bank that you build, that's the key part of let it be a bank. Put it good bankers, let it run as a bank owned by the bank, let it develop those partnerships with your other banks and unions in the state. Let that build and grow and get solid and solidified, because then once it's up and doing that and making money, then all of a sudden you can start doing the extra things. And as you're looking at the idea of forming a state public bank, where I've heard the conversation go, and it goes so quickly, is, well, it can start doing this, and it can start doing this, and it can, it can afford this, it can start funding this type of special housing and this type of, and that's all wonderful and great. But think about, take a step back and look. You're thinking it's something that is done right, it's going to last the next century. This is a higher level concept. This is something that will change the culture of your state government. This is a big concept idea, and I think that big concept idea about it, it scares people. And I think that plays into the politics around it, is it's a scary idea. So I think the more we can make it not a scary idea, but a less scary kind of, here's how you can do it. And it's not rocket science. You're just mimicking what's out in the private, and you're making it fit the state, and then you're using it as a good financial tool. So I think it's politics, and it's lack of understanding of how Bank of North Dakota model has really worked. And I'm sure any model that's developed, the one here for New Mexico, it's not going to be exactly like us. I would not expect it to be. You are a much different state than we are. But I think there's some core principles I really want to make sure that you guys are considering as you move forward, because it's a way to build it right, I think. We're a Traction EOS shop. Traction EOS, the Entrepreneurial Operating System, is the best strategic planning system I've ever found out there, and I've looked through lots of them. in my 25, 30-year career here, that put your vision of where you're going in front of not only your executive team, but in front of however many staff you have, and it gets them all on board with it. Because it simplifies it, right? So we used to, in my banking career, we used to do the whole, every 2 years, we'd hire a consultant, we'd come in, we'd do a $35,000 two-day session to write a 52-page strategic plan, and it was beautiful, and it had SWOT analysis, and it had graphs and charts, and boy, we were proud, and yes, wow, strategic plan, and then we set it on the shelf, and nobody knew what the heck it said for the next, 24 months. What I walk through here with this is right out of our Vision Traction Organizer, out of Traction EOS, and it breaks it down, and this is what I share with my staff every quarter, and this is what we do. It's just these buckets. It's core values, it's our core focus, our mission, and how we show up. It's our core target out to 2035, which is the 10-year. It's the things that make us unique. It's our proven process, and on that path to the 10-year, here's our 4-year, and then we have annual goals and quarterly rocks that we use as part of the Traction EOS system. So that's simply we've simplified it way down, and that's what I like about Traction. And I'm not here to sell you on Traction EOS, but I highly recommend it, especially if you're running any size of company. So that's what we've done to bring it to life. But even there's something deeper there, and something that's really benefited Bank of North Dakota for 106 years. If you look at the CEOs they hired, there's been 15 of them. They've been really brilliant to hire really, really good CEOs that were passionate about North Dakota, that had the business acumen. A lot of them went on to higher off. So Senator John Hoeven was CEO of Bank of North Dakota for many, many years. And there's just been a long history. I tell my staff when I came in, it's like, wow, I'm standing on the backs of giants and all that they have done over the last 106 years. And my staff take that very, very seriously, that there's that legacy there that we need to protect and carry forward. So thanks for recognizing it. It is really deep in our culture and deep to who we are. And we've been blessed with some good luck. We've had, and you reading our story, we've had some problems. We've been to the Supreme Court. We had a little bit of corruption in our history. We've done some wrong things, but we've carried through. And I think some of those core basic things like our structure and our governance and the partnership with the banks and those core principles is why we've carried through and survived and others haven't. Because we've faced our share of problems for sure. Okay, so Industrial Commission is 4 years, reelected. Advisory Board, they have 4-year terms as well, appointed by the governor, not appointed by the Industrial Commission. Those are appointed directly by the governor. They've staggered in the dates, so we don't have a major sweep of a board kind of refresh. So I think it's no more than 2 at really any one 4-year period. And you raised an important point. I didn't touch on this. The power of having the Industrial Commission and say not just being the governor that oversees the bank is as that governor changes, you could end up whipsawing your private bank. And the worst thing you can do to a bank or credit union is start to whipsaw them strategically, because now your risk profiles are out and you're messed up and you're going to lose people and you're going to lose money. So that Industrial Commission provides us some long-term stability that they're, hopefully, and not very often are they all kind of shifting all at one time. Yeah, great question. Thank you. I think our attack approach has been, one, our model benefits it by keeping those community bank branches in those rural communities longer. And those community bank branches done right on their own will, just through their integration in that community, do some of those smaller deals. That's just part of it. Now, they're not going to sell them to us because they can handle those. It's not worth the work, right? But indirectly, we're keeping those community banks more alive longer in those communities. Then we also come around on this side with, I described the PACE program, I described our SBIC, and SBA and USDA, and we have, I don't remember what slide it's on, but we've got those programs that are specifically for communities under 5,000, specifically for small business under 250,000. I think we have one of our PACE programs that's specifically for businesses with less than 15 employees. So we have those, and they work and they help. but they're not going to fully overcome because there's still only 5 farmers and ranchers in that community to support, right? So you're never going to get back to where you are unless you've got some revitalization. And we're seeing some revitalization, and we are, but it's not 100%. And I don't think we're going to get 100%, but we're doing what we can with the tools that we have. It's a big concept, it's generational, it's exciting, but that can also scare people. So the more you can talk about and impatiently talk about it and listen to the concerns and just continue to battle the concerns with the facts, that'll win the day.